Welcome to the introductory day trading course, How to Day Trade. In this video, I've designed it for the novice trader, but also for the more advanced trader who may have traded for a period of time but is new to day trading. If you understand some of the concepts we're talking about in the beginning, bear with me. There'll be more information later in the tape that will interest you. Now let's get started on why you should day trade. You have to remember that day trading is not for everybody, but it is for a certain segment of the trading community, and it may be of great interest to you. First of all, day trading offers some of the very best odds, in my opinion, for trading futures. It's ideal for small traders because the margin requirements are not large, and it is also a way of trading that is endorsed by professionals. Many novice traders think it's much easier, certainly to hold positions over a period of time, but as an experienced floor trader, I can tell you that the professionals are well aware of the risks, and for that reason they are often day traders. The risk is considerably smaller because you have no position at the end of the day. You are said to be flat the market, which means you are neither long nor short at the end of the day. In addition, day trading offers excellent training for all types of trading later in your career. If you want to move on from being a day trader, you can do that as well. Professional floor traders use this market strategy because more than anyone, they are well aware of the risks. If there's anything I want to tell you in this tape, it's that you have to be aware of the risks as a trader. Your primary goal as a new trader is not to make money, but to survive. And I want to stress that point. It's very important that you can come back tomorrow and trade another day. The typical experience, in my opinion, for a new trader is to come into the market, to lose money, and to leave. That's the norm. Hopefully by viewing this tape, you'll gain some knowledge, you'll be able to survive, you'll be able to overcome the initial obstacles you encounter, and you'll go on to make good money. Now, there's two types of day trading that you have to be aware of. There's so-called position trading, in which you hold a position during the day for a period of time. Now, the period of time can be from 5 minutes to 6 hours even. There's another type of trading that only the professionals on the floor use, which is called scalping. And I'm going to stress in this video that you do not try to become a scalper, because off the floor you cannot do it. It cannot be done. The scalpers buy at the bid and they sell at the offer, and they make their money by getting what is known as the edge. As an off-the-floor trader, you're not going to be able to obtain this edge. If you put in a market order and you're buying, you're going to buy the offer. If you put in a market order and you're selling, you're going to be selling the bid. So I want to stress that it's important that you approach day trading in the proper manner, and that is as a position trade during the day. Position trading, as you may know, also refers to holding a position over a longer period of time. But in the way I'm presenting it here today, I just want to talk about positioning it during the day. 1 to 3 moves. By 1 to 3 moves, I mean that you want to trade once, twice, or perhaps 3 times maximum during the day. You do not want to put on 50 trades a day. And on the other hand, you don't want to leave if the first trade is a loser. So I recommend no more than 3 trades a day. The first trade, if it's not profitable, you can try again to get your money back and perhaps more. But you do not want to be in and out of the market many, many times like a scalper would be. Trading capital. And getting started, you have to sit down and think about your trading capital and what you're trying to do. One rule I have is that you never think about margin. Margin money, as you know, is money that you put up as a good faith deposit against your trades. If you're trading with scared money, you're not going to be able to trade effectively. What you want to do is make sure you have sufficient capital going in, and then put the money in your account and not worry about whether you have sufficient capital to trade on the next day. You have to think about adverse impact of series of losers. You will get demoralized if you have too many losers in the early going. You'll want to stop trading. If you have sufficient capital, you'll be able to go on and to keep trading. And it's very important. And I've stressed also that you can't win with scared money. This has to be risk capital. And only you can decide what that amount of money is. I want to stress that you should place your energies on trading and not on the money. By that I mean when you're in a trade, you're not thinking about how many hundreds of dollars or thousands of dollars you're either ahead or behind. You only want to be concerned with, is the market going in your, either up or down, in your favor or against you. And the time to think about the money is after the trade is completed, not during the trade. If you think about it during the trade, you're going to make what I call stupid mistakes and get out and panic and things like that. You don't want to do that. Moreover, trading is a process. A winning day and a losing day should be the same to you. In other words, your goal is to make money, but you know along the way you're going to have losses. Every good trader has losses, and there's nothing you can do about it except to accept them and to have the right mental attitude about them. Now, in getting started as a day trader, it's important that you select the right broker. And by that I mean you want to be comfortable with the firm you select. The way your brokerage firm handles your account should be important to you. If there are mistakes in your account, you want to make sure that they correct them immediately. So if you're not comfortable with your broker for whatever reason, feel free to shop around for another broker. In the futures market, the brokerage commissions are all negotiable. It's a very competitive market, and you should be able to negotiate a commission that you can live with. Now, I'm going to talk a little bit about this because I think it's important that many traders do not take into consideration the cost of the commissions. As a day trader, it's much more important, the size of the commission you're paying, than if you're position trading. That is, if you hold a position for a week or 2 weeks, it doesn't make as much difference. But in day trading, you're limited in what you can make during the day by the range of the day. As a result, the commissions have to be low. And you have to remember that they're negotiable, so you don't necessarily have to accept the first price that your broker quotes you. The price is usually negotiable within a certain range. Now, you're not going to probably find a broker who's going to go much lower than $10 or perhaps $8. On the other hand, you don't want to pay, as a day trader, anything really over about $30. I know that people who think they're paying $60 or $70 are getting better service than the people paying less. I can confidently tell you that this is not the case. Very often the same brokers fill the orders that the customer is paying $10 per round turn on as the customer who's paying $60 or $70. So make sure you shop around for the commissions. Make sure your broker understands you're going to be day trading. As a result, you're going to be generating a lot of commissions. Know the clearing source. Now, this is important because the clearing firm holds the money you deposit with the broker. If you're with an IB, which means introducing broker, the introducing broker acts as a middleman between the clearing firm and the retail customer. So your check will be made out to the clearing firm. The clearing firm has high financial obligations to meet to the exchange. This is important to you because it means that there will never be a problem with the company going out of business or mishandling your money in any way. In addition, you have to insist on service and good service. You want the orders filled quickly. You want any mistakes rectified at once, and by that I mean if there is a mistake in your account, you go to your account executive or your broker, the IB or whatever, and you make clear to him that there was a mistake made and you want it rectified immediately. Now, as you know, all the orders are filled on the trading floor by a floor broker. If this broker makes a mistake in filling your order, he is personally responsible for making good on that mistake. If he doesn't want to make good on it, he'll then pass on the responsibility to the trading firm, your broker. Then they, in turn, will perhaps pass it on to you. But if it is a mistake, it's important that you speak up immediately, and most good brokers will, because they want your business, make good on any mistakes. And by mistakes, I mean if you put in a limit order to buy the bonds, say, at 95.14, and they tell you are filled at 16, well, you don't take that trade. That's their trade.